Well, it was a great session for the market with several major indices reaching new all-time high levels. In fact, today extended a remarkable run of records under President Trump. The 76th record high for the S&P 500, the 92nd record high for NASDAQ, and the 57th record for the Russell 2000. In market breadth, which, by the way, I talked about last night, well, market breadth is looking better and better, and today it was very bullish. Advancers versus decliners, up volume versus down volume, extremely impressive and extremely encouraging as well. In addition, there were 305 stocks that hit new 52-week highs versus only 72 that hit lows. This is between the New York Stock Exchange and NASDAQ. Now, sadly, too many investors are missing this rally, which still, I got to tell you, still in stealth mode because, let's face it, the media, including 50% of the financial media, will remain focused on political intrigue and obsessed with things like the so-called trade war and all the other things that could happen rather than acknowledge what is happening. And what is happening is that this economy is on fire and it's not a flash in the pan. So what was the message of today's session? Well, the best performing sector was communications. Powered by a rebound, and Netflix continues to come on great. So do these video game names. They look phenomenal. In addition to the resurgent consumer, we saw a key measure of business investment. Non-defense capital goods spending, ex-aircraft, it was up 1.4% in July. That is absolutely huge. That helped the materials sector, had a very strong session. By the way, there's so many great names in that sector, including Sherwin-Williams. So I think it's got a lot of room to the upside. The big decline in U.S. oil rigs helped to spur a higher move in oil. By the way, Baker Hughes said U.S. oil rigs actually declined by 9 in the most recent week. That is a huge number. I think this tells us that the U.S. and that the West Texas Intermediate, whenever it gets around $65 a barrel, that's probably support. Concho is a name I love in the oil patch. So where do we go from here? Well, there are several ways to be involved in this market. You can continue to chase fundamentals, which means buying stocks at new highs if the underlying fundamentals are improving just as rapidly as the share price. Then there's also room in everyone's portfolio for names that haven't popped just yet. Keep in mind, 20% of the names in the S&P 500 are still in bear market territory, and many of them are going to come on strong, and they will come on strong out of the blue. Now, it will take some more work to find those, the ones that are going to pay off. Nevertheless, it's worth it. As far as the trade war is concerned, it has slowed down the Dow Jones Industrial Average, but in the process, it's created some mind-boggling opportunities. In fact, I think it is nuts not to have Boeing in every retirement portfolio. This stock is extraordinarily cheap. And by the way, China is going to buy every plane they can from Boeing. Next week could be slow with respect to volume, but the panic pendulum, at least for professionals, is swinging back to not having enough exposure to this market. We could see panic buying. Keep in mind, the economic train has left the station. In fact, it left the station last year. And this recent pause in the stock market was a chance for everyone to get on board. Here's the great news. It's not too late.